Today on the Blockchain Report, Bitcoin's hovering around 90K and the news cycle is doing everything it can to make sure it doesn't stay there. As Trump signed a bill forcing the DOJ to drop every Epstein file online, which should really help America's productivity numbers this month, the long-delayed jobs report finally came out and said, surprise, we still know how to hire people. And Michael Saylor claims strategy could survive a 90% Bitcoin crash, which is bold for a man whose entire balance sheet is Bitcoin. All that and more right now on today's show. Let's go. All right, happy Thursday, my boys and girls out there, and welcome back to another episode here at the Blockchain Report. Again, it's Thursday. We're excited to have you on board, and we've got a lot to talk about on today's show. And in just a bit, we're going to be joined by one of our good friends of the program. Of course, we are talking about the man who can connect the dots like nobody else's business. He's truly a marvel. And that, of course, is Nolan Bowerly. And he'll be joining us in just a second to talk about today's top stories. And we're going to get to that in just a bit. So we've got a lot on today's docket, and we're going to get into that in just a second. So let's get started with our first story. Nolan's going to join us here in just a minute. As the president has officially, we got the bull runs. Yeah, I got to call for the stinger first. It's Thursday. Let's run the bull run stinger, and then we'll get into today's top stories. Okay, so let's get into it, starting with our president, and he has officially ordered the Department of Justice to drop every unclassified Epstein file into the public domain, searchable, downloadable, and ready for the internet to collectively lose its mind. I personally cannot wait. Now, Trump announced last night that he signed the Epstein Files Transparency Act, a bill Congress passed overwhelmingly. The law forces the DOJ, FBI, and U.S. attorney offices to publish all unclassified Epstein-related documents within the next 30 days. Not summaries, not curated excerpts, we're talking the whole thing. Now, this is significant for a couple of reasons. One, Epstein is attached to more conspiracy theories than Area 51. And two, Trump had previously dismissed the idea of releasing these files and called the entire topic a hoax. Now he's framing the release as something that will backfire on Democrats, claiming the documents will reveal new information about political connections. Now, Democrats, for their part, supported the bill nearly unanimously, meaning both sides appear convinced that the files will make the other side look worse. The DOJ has maintained for years that Epstein acted alone, had no client list, and died by suicide in 2019. But pressure has intensified in recent months from survivors, lawmakers, and even MAGA allies demanding full transparency. Attorney General Pam Bondi said she will follow Trump's directive and pursue new investigative leads, claiming she has received new information, though she did not explain what exactly that means. Survivor groups applauded the bill's passage, calling it a long overdue step toward clarity and accountability. And joining us this morning to chat about this and other stories, we have the great Nolan Bowerly joining us. Nolan, it's Thursday, you're here, and we're pumped to have you as always. How are you doing today?
Hank, I love life. Nothing to complain about today. I'm optimistic about the future of humanity. I think things are working out. Things are working out.
All right, your optimism is contagious. I, on the other hand, a little bit more on the pessimistic side of things, but your sunshine is hopefully going to rub off on me. So let's get into this first story, Nolan. You know, you've written extensively about what happens when trust in institutions collapse. So when a president orders the DOJ, the FBI, and U.S. attorneys to dump every unclassified Epstein file online in 30 days, raw, unfiltered, searchable, do you think transparency actually rebuilds trust, or does it unleash even more chaos because people interpret documents however they want?
Yeah, I definitely predict you're going to get way more chaos. I mean, part of the story here is the credibility of these institutions, and they haven't been able to really underline much credibility until now. And that's kind of why they're in this spot. And you can see a lot of cognitive dissonance out there. Cognitive dissonance being when your information doesn't really jive with reality. And one of the symptoms you can see of cognitive dissonance is word salad, when people start just blah, blah, blah. And that's kind of what you saw yesterday on most of the legacy news channels. You saw Presley, one of the people from the squad, couldn't answer basic questions on BBC. You had Jasmine Crockett, who was on, I think, MSNBC, couldn't carry water there either. And you're seeing all of these half answers, deflections. And so I doubt you're going to see much in the way of these institutions reforming themselves. Again, I go back to the wrestling frame. And I think kayfabe is really the game here. I think yesterday when you saw the Saudi Arabia America economic summit that went on and Trump delivered a few remarks, you saw him address Elon Musk, who was in the crowd, saying, "Hey Elon, you know how we talked about you don't give them the tip about what you're doing." And again, I mentioned yesterday the coincidence of Elon reappearing right when this Epstein file question is unveiled. And that's exactly what Trump said live in person yesterday to Elon about persuasion, about sucking people into a frame, about getting people themselves to ask questions. So the answers aren't going to come from the state. The bigger question here is that people are asking the right questions. It's kind of like what I said about RFK, for example. I don't look at RFK for my scientific advice. I look at him for the questions he's answering. He's not a science. I mean, I don't think he has the answers. He's not selling the answers. He's selling questions and which questions should be asked. And I think we're going to be stuck at the which questions should we be asking level, not the where do I get the answers from. And that's the whole game here, right? It's do you have the ability to critically judge the effectiveness of institutions? Again, I'm a big believer that the American mind has been formed by Hollywood and by the three-act play, by Star Wars, by Lord of the Rings. It's always introduce the characters, put them in the worst possible situation, and then get them out. I mean, Empire Strikes Back was followed by The Return of the Jedi. A lot of people have used that three-act play already to describe Trump, right? Trump was down and out. It was over. The whole story of Trump was supposed to be done, and suddenly he's back. And so we're dealing
Yeah.
with the absolute peak of persuasion. We're dealing with Hulk Hogan, NWO turn, heel turn. We're dealing with Lord of the Rings. We're dealing with, Hollywood. So.
Yeah, I mean, it certainly seems like a story we've seen play out before. And what's particularly, though, unique to this story is that we actually have both parties supporting this release because each believes the documents will politically damage the other side more. So what does that kind of say to you about where the U.S. is as a society when even transparency becomes weaponized along partisan lines?
Well, again, I think that you're seeing Trump's ability to strategically draw people into his frame, and I don't think that's different here. I think you're going to see him. I think Greg Gutfeld described it yesterday as they've armed Trump with a paint gun, and he's just going to pop. He's turned it into a visual story about Larry Summers, who no one, I don't think any Democrats are out trying to defend this guy. I mean, I've worked with Larry Summers. He's a slob. He's a disgusting slob. He was on the board of DCG that owned CoinDesk. I'm in a Zoom studio here. I was in a Zoom studio with him once before, and his shirt was unbuttoned, spaghetti stains on the shirt. I mean, I had to get someone to politely say to him, we're not going to put you on camera. I don't care if you were the Treasury Secretary once you look disgusting. Yeah, you look gross.
Yeah.
And so I had to bring like a polite person in to deal with it. And so Larry Summers, I don't think you're going to find many people willing to defend this guy. And it's not just like, how do I bang the manatee? Like that's the gentle side of how disgusting he is. The other part of it, we saw that the Chinese infrastructure bank daughter, who was like a very beautiful woman, guess what? She wasn't into Larry Summers' turkey neck. That's not what was going on. And these are like major institutions that define American foreign policy. And it's so
Right.
incredulous that this woman whose dad is the head of a bank was actually into this guy. And so you're not going to find anyone to defend him. I don't think you're going to find anyone out there trying to defend Reid Hoffman on a lot of these accusations. You're not going to find anyone trying to defend the Clintons. The Clintons, as far as I can tell in the Democrat Party as it stands today, with AOC and Mamdani and these guys really developing the talking points, I don't think they're out to try and help Clintons. And so I think the Clintons are now on an island unto themselves, and it ain't Epstein Island. It ain't going to be that fun for them. It's a totally different scenario.
Yeah.
So I think Trump gets to just have his way with this now. I think it's just every day he gets to open up the Gatling gun and just go bang, 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 bang. Look at all these Democrats. And
Hmm.
I think eventually they're going to stop talking about it. And I'll even go back to the original frame that I used when you first had Elon and Trump draw everyone into this drama, which is you saw this huge fight happen inside of the Republican Party or MAGA or whatever it was, right? It was all these
Hmm.
Elon stands and the Trump stands and what's going to happen and we need disclosure. I made a prediction then that you were actually, because the Republicans were able to have an intra-party fight, that you were seeing the Democrats were incapable of an intra-party fight. It has to be ignored. It can't be discussed. I think this is a sign of the Democrat Party really circling the drain. I don't think they survive this. I think that the Epstein thing, if they keep pursuing it, they keep bringing it into the talking points, they're going to cease to exist as a political party. And what you see inside the Republican Party, the factions, the confidence they have for the debate between the Tucker Carlsons and the Ben Shapiros or whatever other fault lines you have, that's a sign of confidence that they're strong enough to have a debate internally. And I do think I mean, I'm a big fan of two parties. I'm always, I believe that rot and entropy sets into a party. And, I welcomed Obama in 2008 because of just how horrendous and terrible the Republican Party had become in 2008. So I thought, hey, anything besides these scumbags will do. And you kind of want two parties because you want to switch back and forth, right? It's just a healthier thing to have in a system. So I think you're going
Hmm.
to find new political parties out of the mess that we
Yeah.
have here. And whether they're still branded Democrat, I don't know. But it looks like Mamdani and AOC and the others who don't look like they're involved in any of this stuff. I mean, I'll say about Ilhan Omar, for example. Ilhan Omar, during the Canadian truckers issue, defended the people who were getting their bank accounts seized whether or not they're on her political party, because she's not a big money, she doesn't get big money donations, right? She is a small
Hmm.
kind of retail, a little bit of donation here and there. I mean, there might be some corruption around it, but I just want to say, that's kind of where I see the future of the Democrat Party going. And I saw yesterday, even
Hmm.
Cenk from the Young Turks said it very explicitly. He said, I don't see what this is just a free for all for Trump now. And I don't see how he's ever even going to get one single scratch on him based on what we see. It looks like Epstein hated Trump. It looks like he conspired against him. And it looks like it's going to be mostly exposure for Democrats. I think it's an existential danger for them to even keep this up. So I think that what you
Hmm.
see in the world of Nakamoto consensus, right, which is what I tied it into, Nakamoto consensus really being that, like in Bitcoin, we can fight about everything and still get along. I think that's where we want to get
Hmm.
back to in politics. We want to be able to have a fight, but still be friends afterwards, still be okay like it was in the 90s when you could just be on a separate political party and not hate
Right.
everybody.
Well,
So Bitcoin has
Gingrich
that
ruined
frame.
that for everybody. So,
Yeah, it
I mean, that
started
was a
there. It
Gingrich thing,
started
right? Yeah.
It started there. It started
He
there.
was
I would say that the war in Iraq really is what solidified it because that was the point.
Hmm.
Myself as a Republican who was constantly at that time forced to answer for George Bush Jr. and all of those people, and I wasn't even on that side. But it would create that scenario. Oh, you for the war in Iraq? No, no, no. I'm just not a Democrat. I'm not for the
Hmm.
war in Iraq. And I think you
Yeah.
had, really it became almost like people just talking over each other by then, and so that, it started in the 90s, but the 90s were still a time when, even myself, I liked Bob Dole, but I liked Bill Clinton. I didn't think he was
Oh yeah.
terrible at the time. I thought he was fine. So hopefully we can get
Yeah.
back to there.
Yeah, let's hope so. But yeah, you're right. It's like the Democrats and Republicans. It's such a different thing than it was of yesteryear. Like both parties are just changing so much. I don't know what's up anymore. It's very confusing. But we got Trump in office and he's doing his thing, and we're going to talk about that right now because this next one's wild. So President Trump right now is threatening to fire his Treasury Secretary because the Federal Reserve won't listen to him. See, at a U.S.-Saudi investment forum, he said that if Treasury Secretary Scott Bessent doesn't fix interest rates soon, he'll fire your ass. Quote. Now, there's only one tiny issue with this plan. The Treasury Secretary has absolutely no control over Federal Reserve policy. Now, the Fed sets interest rates independently based on economic data, not presidential vibes. So firing Bessent would have as much impact on rates as yelling at your thermostat for winter happening. Now, Trump has spent much of his second term urging the Fed, and specifically Chair Jerome Powell, to cut rates faster and deeper. The Fed, meanwhile, has been moving cautiously because inflation is still higher than its 2% target, and Trump's tariffs haven't exactly helped. But according to Trump, Bessent has been privately begging him not to fire Powell. Trump even reenacted the conversations on stage because when your monetary policy drama becomes dinner theater, you might as well lean in. Trump's frustrations may continue, but here's the inconvenient truth. Even if he replaces Powell in December, the Fed chair only gets one vote, and you need a majority of the 12-person committee to actually move rates. So firing Bessent, firing Powell, replacing the chair with someone who shows up wearing a cut rates now hoodie, none of that guarantees anything. Because at the end of the day, the Fed listens to data, not ultimatums delivered at investment forums. We're bringing Nolan back. Nolan, Trump publicly threatened to fire Treasury Secretary Scott Bessent because the Federal Reserve won't cut rates fast enough, even though the Treasury Secretary doesn't have control of the Fed. What does it signal when a president expresses frustration in ways that disregard the actual mechanics of monetary policy?
Well, so I'll address the mechanics of monetary policy in a second. First up, the Bessent thing is just Trump theater, Trump stand-up comedy. Like that's just him having fun. He loves Bessent. It appears, and yeah, it's Trump being the stand-up comedian that everybody knows him as. Now, about the Fed independence and monetary policy and the physics and mechanics of it. Of course, we got to go and look at the reverse repo market because it is starting to take back up. The reverse repo is the commercial banks that are parking cash for treasuries between the Federal Reserve, and it's a swap. And so this thing happened, really started in 2019. It was one of the things Bitcoiners were paying attention to. It was a big deal. It ended up going from $25 billion overnight, which is kind of like a subsidy for the banks because with a repo market trade, a swap like it is, it's not a leveraged trade. It's a one-for-one swap. It's ownership. Title actually passes. It doesn't create a debtor-creditor relationship. And this is really important because it affects how the Fed manages its balance sheet. When it pumped this up to about $2 trillion overnight were parked. And again, they earn the interest overnight, right? So this is just banks parking excess cash at the Federal Reserve, getting paid overnight. It's not a ton of money, but it adds up, and those are millions of dollars that come in every single day. So what Janet Yellen did when she took over for Joe Biden in those years, so this started under Trump, COVID hits, and then it goes, to the max. Janet Yellen was using short-term loans and drawing money out of the Fed's balance sheet. The money the commercial banks were parking, she was taking that to fund the government. The Fed Reserve was buying the bonds that the Treasury, the short-term bonds the Treasury was issuing. That's what Joe Biden was funding the government. But they shrunk all of that money that the commercial banks were parking at the Federal Reserve. They took the $2 trillion down to nothing. So that's why they didn't need to do a print all of this time. But what it ends up signaling is that they were giving this type of flexibility was purposefully being used to juice the Joe Biden administration to fund it. Now, it was a clever thing. Janet Yellen had been on both sides, right? She had been the Fed Treasury, she had been the Fed chair, now was the Secretary of the Treasury. She knew what she was doing. And this made the Federal Reserve actually, if you look into what Trump is saying, it made them political already. They went out of their way. They manipulated interest rates using complicated financial maneuvers that, take a lot of time to even understand. And so when Trump came in, they had already been political. They were lowering interest rates for the election once that $2 trillion ran out. And so Trump, and I've said this is the story going through the whole year and why I believe we're going to end up at a Bitcoin bond, a bit bond, is because the whole point of subordination of the Federal Reserve to the Treasury, some people can say it's the reinstitution of the constitutional republic. The Treasury that Hamilton created was supposed to be the driving force of what the government is willing to pay for interest on the debt they issue. Now, because the Federal Reserve buys the debt from the federal government, they can say at what rate they're going to buy the debt at, which is how they control the interest rate, right? Now, if you can find a new buyer, it used to be other central banks. So if you can find a new buyer, great. What it looks like they're going to use are the stablecoin companies and all of those folks. So Besant can actually legally take control of interest rates in this way if he has someone else besides the Federal Reserve to buy it. How do you do that, right? How do you make it interesting in order to get people interested in the bond? You do it by sprinkling some Bitcoin in there, and that makes it interesting. Without high interest rates, you can keep interest rates low if you put Bitcoin into it, which is a signal that the whole economy is changing. You saw, like I said yesterday, at that same UAE forum, Saudi Arabia saying they're buying Bitcoin. You see that energy, like we talked about yesterday, is more and more not just a like a .com thing. This is industrial military policy now to have as much energy as possible. And so Bitcoin grafted onto that means it looks like the actual treasury with industrial policy can circumvent the entire Federal Reserve system and go back to the more constitutional republic system of having interested buyers, generally energy companies, stablecoin issuers, buying bonds, probably that will have Bitcoin in it because of the synthesis of the energy industry and Bitcoin and how important it is for the grid and all the stuff we learned yesterday from that same summit. So what I see from the Federal Reserve doing this has been my frame for the entire year. I did the Inauguration Day broadcast at PubKey. I said the whole story of the year is about the subordination of the Federal Reserve to the Treasury. Arthur Hayes has much more colorful language. He describes it accurately as the big Besant cock and the cuck chair for Powell. But, I chose subordination. Arthur Hayes, some people say the best writer in Bitcoin, chose his own frame, and it looks like that's what's happening. So it looks like the Federal Reserve is wasn't independent and is not going to be independent going forward.
And Trump, as we know, has been pushing the Fed to cut rates just for some time, despite inflation still being above target and mixed economic data coming in. So from your macro perspective, Nolan, how dangerous is it when political incentives and monetary reality collide so publicly? It seems like it could be problematic.
Well, I think that's what we're already in with the US dollar, right? It's done that for a long time. The US dollar has been a hegemonic weapon of the United States for a long time, and they were able to control how oil markets work, energy markets worked. You were able to use the actual Federal Reserve as the choke point on the financial system in the ways that you wanted to advance your own industrial policy. From what we saw yesterday from the Nvidia earnings, for example, it is now just about production capacity of these chips. And, I think the language I was talking about on my show, I found a really good frame for it, and I'll read it very quickly to you because it was interesting. So the fellow whose tweet I was reading, he said, we control the entire evolutionary timeline of AI compute. We can extend it, accelerate it, or freeze it. When a company's legacy hardware still runs to full efficiency, it means they've ceased to be a producer and have become a regulator. Nvidia is almost a regulator now because if you don't have access to the chips, you don't get to participate in the way the economy is working. So we're having private companies now that are rising to this level of industrial policy and controlling reality, the reality of your country. And so there is a big portion of the economy now that, if you don't have access to this stuff, you don't get to participate. So it's moving beyond legal systems and pushing us much more into a private company, type of world where private entities are growing stronger and stronger and more capable of instituting, these types of commercial industrial war policies, if you will. And it's not really the government doing it anymore. It's just the scale has changed.
Right. Yeah. Nvidia is interesting, right? Because it's kind of like you said, like if they control kind of the picks and shovels of this AI gold rush, and if you don't get picks and shovels, you can't participate. So that's a really interesting point. And kind of getting back to Powell and Trumpy here, even if Donald replaced Powell tomorrow, right? One Fed chair only gets one vote on a 12-person committee. So Do you think like this moment, it all shows the limits of political influence over monetary systems? And does it strengthen the long-term argument for money that sits entirely outside of political control?
Well, so he's got Stefan Moran, who is also on the board now. He was Moran, who was put in there over the summer. And Moran, if just to put more policy to the face, he is the architect of what some people call the Mar-a-Lago Accords. And if we're right about everything that I've been saying about Besant, about bid bonds, about Nvidia energy policy and all that stuff, and microchip policy, the Mar-a-Lago Accords, the broad strokes, it's all sort of rumored, right? It hasn't been published, but people present the Mar-a-Lago Accords as if they are the antecedent, the successor to the Bretton Woods Compact. The Bretton Woods Compact being the agreement made by great powers after World War II of how to run the world economy using the Federal Reserve System, the US dollar. US dollar became the exchange rate for all other fiat currencies. And so the Mar-a-Lago Accord is something entirely different. It is literally what they're talking about with Nvidia. It is access to the chips, it's access to American weapons, it's access to American ingenuity. And so that stuff is already there with Moran as the architect on the Fed board. You're going to see, I think you're going to see a more detailed articulation of the Mar-a-Lago Accords going forward. So they might not have everyone now, but with Moran in there, with Besant or whoever else comes and takes Powell's place, I think you're definitely going to see that type of articulation of what the Mar-a-Lago Accords. You're going to see all of these threads brought together, and I think you'll understand energy, Bitcoin, and the access to weapons and tech and energy and chips and all the other things, all articulated really in a cohesive and coherent economic policy. So can Trump do it? Yeah, I think so. It's a narrative-based thing, and I think you can get a lot of people on board. Folks like the Saudis buying in, folks like from the UAE buying into this. You've got Japan, of course, absolutely, totally, 100% buying into this idea. You got all the pieces you need to really bring something out like the Mar-a-Lago Accords. And I expect the Mar-a-Lago Accords to be more articulated over the next few months as this starts to take place. Now, we know Besant, I guess he has breakfast once a week or something with Jerome Powell in the building. Yeah, they meet a lot. Yeah, they're regularly friends. That's why Besant is always saying don't fire him, because he's they're like buddies, I think, and they hang out. But
yeah, well, that's kind of like to my point about Gingrich, right? Like when politicians from other sides of the aisle used to hang out outside of political discourse, they would form these bonds that allow them to, in fact, work together across party lines, but we don't see that the same way now.
Yeah, I think that ramps up. It's part of these cyclical changes. It was kind of definitely the same around the Civil War. It's not like Democrats and Republicans were chummy then. One was murdered on the floor of the Senate, right? Like the guy came in with his stick and killed another, I think, congressman or senator. Someone was murdered right on the floor during that time. So we're not at the worst of our disagreements. Yeah, that was one of the things that actually spurred the Civil War was one of the fellas had a cane and he hit another legislator on the head. I'm not sure if it was a senator or a congressman, but he died. He died on the floor. So we've had it worse.
Wow.
Yeah, cane shot. Yeah. I mean, I think he beat him a bunch. I don't think it was like a hook like that. I think he went to town on the guy.
Yeah.
But that happened.
And everybody just watched? That's crazy.
Yeah. Well, I mean, they went to war after, but they watched for a little while.
Okay. They watch for a while and they're like, okay, this is war now. All right, let's move on to the next story here, Nolan. That's crazy. I wasn't aware of that story.
Yeah.
All right, so after a 44-day shutdown delayed economic data, the government finally released the long-delayed September jobs report, and they blew past expectations. The U.S. added 119,000 jobs. That's more than double the original forecast of around 50,000. Hiring came from familiar places. Healthcare added about 43,000. Restaurants and bars served up 37,000. Social assistance chipped in about 14,000. Meanwhile, transportation lost 25,000 jobs, and the federal government, which is having a rough year, shed another 3,000. Meanwhile, unemployment ticked up to 4.4%, the highest since 2021, though still historically low. Now, for the Fed, this report is equal parts helpful and stressful. They've cut rates twice in a row to prevent unemployment from spiking, but inflation is still above target, and Powell keeps reminding everyone the Fed has one tool to fight two problems. Markets now expect a 66% chance the Fed holds rates steady in December and a 33% chance of one more cut. Either way, this report is backward-looking, a snapshot from before the shutdown, but it still moves stocks, bonds, and everyone's anxiety level. The only honest conclusion, the labor market refuses to follow the script, and the Fed is stuck acting like it still makes sense. Nolan, we finally got the September jobs reports, only 44 days after the government shutdown froze the data pipeline. When the core metrics we use to run the economy get delayed for weeks like this, what does that reveal about how brittle and outdated our governance infrastructure has become?
Well, I mean, I don't trust these numbers as they are. I don't trust the numbers under Joe Biden. I won't trust them under Trump. All the data that we have basically in the world, any data that has money attached to it is garbage. All. There isn't an exception except for what's happening on the Bitcoin blockchain. It's literally, that's why we can imagine a Bitcoin standard. It's because it's almost singularly alone and unique in that we can trust that what happened, not the price is manipulated, but on the Bitcoin blockchain, what's the hash rate, how many miners, which transactions were confirmed. It is literally the only data on Earth connected to money that is worth a damn, that can be trusted. Everything else is gamed by someone. Even baseball numbers are gamed. Even baseball is gamed because the numbers are attached to money. And unfortunately, incentives mean more than almost anything else when it comes to human behavior and our capacity for honesty and our capacity for, it's not an indictment of individuals and their intention to tell the truth. The whole thing is muddied. The whole thing is completely lost. And so I don't trust Trump labor data. I don't trust Biden labor data. The idea that we would even try and run an economy off of labor data or whatever other data shows exactly what you said, just how outdated these ways of thinking are. And because they'll be changed, they'll be gamed, they'll be monitored. If you can't actually audit the numbers, they're not real. They're not real. It's a shitcoin, right? If you can't audit the numbers, they didn't happen. Don't trust, verify. It applies to almost every system in America, the election systems, the data, the Federal Reserve. What do they have, 25,000 economists working there or something like that? So how in the world could 25,000 economists ever come up with the same, worldview or the same data? None of it's true. So they're publishing the data. Sure, they can publish it all they want, but I don't think anyone on Wall Street is going to pay attention in the future to this stuff. This is all just more of the same, more of a bygone era, and these are the last vestiges of it. And so that's the things you can trust are, how much money is being deployed in this industry to create more electricity, how much wattage, voltage, amperage, all those things. And ultimately, what's the hash rate? Ultimately, what's the compute power? That's where the economy is headed. And no more of these, data points that we don't really know what's behind them and who's behind them and who benefits. And you have to factor all that in to even get a sense of what's going on. Most of these people are just sort of trying to keep their jobs, I bet, and doing their best to come up with their answers. And so, I anticipate the jobs report as much as I anticipate the latest release of some Pokemon cards or baseball cards, or it's irrelevant, whatever the new shitcoin is.
Not a Pokemon fan, noted. Yeah.
I love Pokemon.
Well, it's they have their place. They're pocket monsters.
I got kids. They love them.
Yeah, it's a great kids thing. It's really there's a real adult thing about that now. I see videos pop up. People just unboxing them. I don't get it. Not for me.
People are weighing the boxes. They're weighing them because the shiny cards weigh more.
Yeah, I saw an adult guy, a video of him like at Target with things, and I'm like, you creep, leave it for the kids. Come on,
Exactly,
man.
exactly.
Disgusting. Get out of
Yeah.
here. I don't want that. But going back to the report here, I know you say you don't trust these numbers, and I get that, especially when we have this report that's showing a labor market doing seemingly contradictory things. We got strong hiring numbers alongside rising unemployment and big swings between full-time and part-time work. So how is somebody supposed to interpret an economy that's clearly deviating from traditional economic models, especially when we don't even trust the data?
Yeah, I wrote a book probably 2 years ago or a year ago called The Career Guide to the Fiat Apocalypse, and I tried to
Mm-hmm.
articulate like what jobs would exist as we change systems. And indeed, you can't
Mm-hmm.
really go off of though, like you can't even, guess what jobs will be around. I used like psychological archetypes because we're in, I describe often economics as a psychological engine. And that
Mm-hmm.
means, your optimism, your enthusiasm, your the single-mindedness of your direction, where you want to take things, what you think is needed, what you think is innovative. All of those things come together and create the ability to either perpetuate economic arrangements and secure and
Mm-hmm.
productive economic contracts and agreements between two, three, four people, five people, an economy, or, in the case of pessimism and no way out and no idea how to fix things and no idea what to do and where to go, that's where the fiat system is right now. It's psychologically without hope, without a future. You can't really get someone who doesn't understand Bitcoin, only understands fiat, to articulate a productive future for humanity. You'll get, oh, we need to do global warming stuff, spend money on this, but you're not going to get a really utopic idea of a goal right now. Trump's whole golden age talking point, right? The point of Trump, is it breaking up a little bit? Yeah. Trump embracing this golden
Mm-hmm.
age frame really articulates that psychological space that is more important than a jobs report. That's directionally where things are headed. So when you hear Trump constantly double down on golden age, he's been doing that from the very beginning of this presidency. Everything has been about a golden age. We're returning to a golden age. Now, the golden age, to some might not be a golden age at all. It's change. It's different than it was. So when you hear those golden age things, that's psychological triggering to get people enthusiastic about building, to believe in the system, to have trust in the system. But compare that, you had Christine Lagarde yesterday saying, okay, the digital euro, good news, she said, the digital euro is coming. We're going to rebuild trust. It's your money. Compare those two things, and then you get a sense of the psychological engine and how important it is. So Trump is a great cheerleader. Trump's enthusiasm is, I think, what helps a lot of people have the gumption and courage to go out and do things. Now, not only Trump, of course. Trump is tapping into something
Yeah.
that's innately in people. So I think of the psychological perpetuity as the most important factor here. And Trump embracing Bitcoin, embracing optimism, embracing energy independence. Those are the things that make an economy really tick forward. Energy, in the end, is the economy, and energy companies run the
Right.
world. They can use the nation state in order to advance their purposes, but it looks like they're starting to realize that maybe not. Maybe we should leave nation states to paving the roads and taking care of these things because they're not an effective vehicle any longer to perpetuate nation state energy consumption, dominance, creation. That's going to the private sector. That's going to AI. That's going to the chip makers. That's going to Bitcoin and the other folks. So that's what I'm seeing.
Mm-hmm. Yeah, no, that makes sense. And speaking of nation states, that's a good segue into our next story here. China heard that Japan mentioned Taiwan once in parliament and immediately threatened their entire trade relationship. You see, China's Commerce Ministry announced today that trade cooperation with China has been severely damaged, all because Prime Minister Sanae Takahashi said that a hypothetical Chinese attack on Taiwan could force Japan to respond militarily. Beijing wants her to retract the comment. Tokyo said, nah, no notes. We're good. China is Japan's second largest export market, buying roughly $125 billion in goods, semiconductors, cars, high-end machinery, things like that. South Korea is Japan's third largest buyer at $46 billion. So replacing China is like replacing your biggest client with three medium ones and hoping that just nobody notices. The U.S. has already jumped into the group chat. America's ambassador to Japan posted that Washington will support Japan if China retaliates. Analysts say there's no off-ramp here. If Takashi apologizes, it's political self-immolation. If China backs down, it looks weak. So both sides are locking in for a long geopolitical staring contest. Bringing Nolan back. Nolan, Japan's prime minister made a hypothetical comment saying a Chinese attack on Taiwan could trigger a military response, and China immediately threatened trade retaliation. What does this tell you about how thin the margins of diplomacy have become in East Asia right now?
Well, again, World War III, that I believe we're completely in the middle of, is a psychological and economic war. And these countries have been participating in these kinds of tensions for a while. I used to live in Japan. I used to live in South Korea and spent a lot of time in the area. And I've seen this story play out a few times. I was in China once where they burnt every Toyota in sight because of some similar thing that happened. A lot of this goes back still to the last World War. There's a lot of harsh feelings about the Japanese takeover of China and what China calls its century of shame from the time when the British arrived and started really prosecuting the Opium Wars and doing all those terrible things, right? The Opium Wars are one of the most biggest black eyes on British imperialism that you can think of. And so Japan, of course, was in its own way involved in a lot of this stuff. And, their relations with China are always going to be a little sticky. Now, when it comes to Taiwan, personally, I believe eventually it's got to go back to China. I don't see how you could stop that in any way. I think whatever happened to Hong Kong, that's the future. Now, in the same way that the Matrix movies ended with Neo being absorbed into Agent Smith, and that changed the whole world. I do believe that China absorbing states like Hong Kong and Taiwan is a bit of the same story. I don't think China gets to stay who it is. I don't think China gets to stay exactly as they've been configured. I think you choke on the bone. I think you try to swallow Hong Kong and Taiwan, and you're not going to be the same at the end of that. So I think Japan and Korea will always sort of be great examples of American imperialism after the World Wars, which are, okay, you let your merchants run the country, no more scholars or samurais or bureaucrats. You're going to let your private industry run wild, and we're going to support you, and we're going to rebuild the country. And this was the world had never seen this before, right? They'd never seen the delta between America and the second place country after World War II has never been greater. There's never been a scenario like that. There was no one who could have stopped America at the end of the World Wars. They had the nuclear bomb. They hadn't really suffered in wars like Russia did and China did. And America had a choice. They could have just bulldozed everybody and taken over, or they could have done what they did to Korea and Japan. So there's always going to be psychologically in the minds of the Japanese and Koreans kind of an awareness about the lack of a better word, lucky deal they got. And the lucky deal they got was go and be yourselves, go excel, go be amazing. We'll even pay for it. Just stop killing people. And they went with it. And so there's, like with baseball, right? You watch the Japanese play baseball, you watch them, the World Series this year and all the Japanese baseball players, and you can really understand what American imperialism at its best looks like. You get the worst of British imperialism with the Opium Wars and what China got, but you get the best, and that's what the deal that Japan got, and all this great, American stuff. I mean, they're doing Hollywood now better than America. K-pop Demon Hunters is by far the biggest thing kids talk about these days. MAGA is a manga, not MAGA. Although the Toyota guy is a MAGA guy, we noticed yesterday he was in full MAGA attire. The chairman of Toyota, the actual Toyota, the family name guy, because they have something like it's kind of feudal in Japan still. These huge families, the chaebol in Korea and the zaibatsu in Japan. They're these giant families, a bit like imagine Disney also made cars and also made snacks. Like that's what they got in Japan, like these big families. The Hyundai family, they make everything. You can get snacks, you can get things you've never even heard of. that are labeled and branded by these
Yeah.
companies over there. And so it's almost like feudalism. These huge families play a massive role in industrial policy, and you can't really change these things after this much time. Whereas Taiwan is still very naturally Chinese. I would expect China to be able to welcome them in. If they do it by force, yeah, I don't think there's anything we can do about that anymore. I think that's written in the stars in a certain way. But what the effects will be on China left to be, seen. I don't think the CCP can survive that. So I think you're going to see regularly these things flare up all the time. There's a saving face aspect to it all. The Japanese piss people off all the time because of the history. I don't expect any of that to change, but they always know how to sort of tone it down after a little while. But inevitably, I think most of America is aware. So is Japan. So is Korea. Eventually, Taiwan goes back. It's the reason why North Korea exists, right? I sat in a KTX train once. That's the high-speed train in Korea, and you see this beautiful train, and the towns where you're going to all flash up on the train board, and it's all the dumbest cities, Mokpo, and places you've never even heard of. And the reason why you can't take that beautiful train to Shanghai or Beijing or Moscow or London, why not, is because China doesn't want America sitting literally physically connected to it. It needs a buffer zone like North Korea. And so they have the buffer zone when it comes to Japan by the sea. And Taiwan, I would imagine, because it's an island, it's complicated, but I do expect it'll become China eventually. What China will be after that, nobody knows.
Yeah. Oh man, that is a complicated web there. And I had no idea that Shohei Ohtani was the latest example of American empiricism here. But I'm here for it, and he's better at everyone at baseball. So rock on,
The greatest
Shohei,
ever.
two-time World Series champion. Yeah, he's
Greatest I've
remarkable.
ever
That guy's
seen.
nuts.
I've never seen
Get,
anyone like him.
yeah, he's Babe Ruth. He's Babe Ruth today.
Yeah.
He's just
Oh,
unbelievable and so
I think I
clutch.
even have this is oh no, I don't have it. I
You
collect
got a
hats.
Shohei bobblehead or something?
No, I
Oh, a
have
hat.
a
Okay, nice.
beautiful, it's not this. I bought it at the same time as this, but I have a hat that is
Oh,
the
was that his
hat
Japanese
Babe.
team?
No, that's the Osaka Tigers. He did not play for them. That's like the Boston Red
Okay.
Sox of Japanese teams. No, I have a hat that Babe Ruth wore in Japan. It's
Whoa.
a American crest with a rising sun on it. It was a 1920s tour that Babe Ruth did in Japan to spread baseball. Now, because of World War II, the Japanese banned baseball because it was American. They made the stadium of this team a weapons depot. And that was the first thing the Americans
Oh.
did when they went to Japan is they made them play baseball again. That was like the original policy. You're going to play baseball again and you're going to be great. And that's what we got.
Yeah. Yeah, they're so good too. I don't know if it's wrong to say. I don't know if it has to do with like they were doing the samurai swords back then, but they're awesome.
That's
And
that's
the hand-eye
that's what it is.
coordination
Yes.
intro off the charts.
That's
Is it?
exactly what it
Okay,
is.
I didn't
Yeah,
know if
yeah.
that would like be
Yeah.
politically incorrect to say, but I'm like they're
No,
damn
no,
good
no.
at it. So respect.
That's what it was. Yeah, that it was taught that way to them as
Okay.
kids. It was samurai against samurai, pitcher versus batter. That's why the sport really took off.
Okay, good. I wasn't looking to get canceled this morning, so I'm glad to hear it wasn't off base of a comment. And what's really particularly interesting to me about this situation, right, is like Japan is strategically aligned with the United States, but it's economically intertwined with China. So my question for you, Nolan, is like, how sustainable is that dual track relationship in a world that seemingly is rapidly fragmenting into rival blocks? Like, is that sustainable?
Yeah, I think so. I think that the Chinese Communist Party has its own economic plan for the world. It wants to build infrastructure. It wants to force its way into ports and train stations. And look, they're building a lot of stuff. Everyone says debt diplomacy. I don't know the details, but that stuff doesn't work on Japan. So they have very few ways to influence Japan. So they're naturally competitive. They're naturally in the same markets. They build cars, they build infrastructure. Japan has the rare earths as well out off the coast. And that was one of the deals the Americans made, access to Japanese rare earths. Japanese also have the ability to build manufacturing domestically. They have all kinds of factories, just like the Koreans. That's when Trump is going against his MAGA base saying we need H-1B. It's technically now I understand the MAGA says, what about India? Because India doesn't have the same capacity, or well, capacity is the wrong word. They don't have the same track record of building the high-end factories that the Japanese and the Koreans have. So if you remember
Right.
when the Trump administration used ICE to take out a Hyundai plant in one of the Carolinas and actually arrested a bunch of Koreans, that was a major problem. And yeah, they arrested a bunch of Koreans. And so when Trump is saying that he's supporting H-1B for these particular instances, he doesn't want to get into the same fight that he had with Korea, because Korea actually has to bring over the people to build the manufacturing capacity. Apparently, Americans don't know how, or something like that. I don't know the whole story, but that's what Trump will say. We don't know how to build this stuff. We need the Japanese, we need the Koreans. They got to come over. They got to show us. They can go home after, which doesn't happen. But you can see that the Trump willing to go against his base here is because he doesn't have a choice. He needs these skills and he needs these abilities, and he's going to make the case to his own base that this is what's going on. So I see this as, Korea and Japan as almost integral to American systemic economics around the world. It's why, I mean, when I was at CoinDesk, the first two foreign language publications that I said we should stress were Korean and Japanese. And everyone said, but there's more Spanish people. And I said, well, they don't buy Bitcoin. They buy Bitcoin in
Yeah.
Korea and Japan. And you know,
Yeah.
I learned when I lived in Korea and Japan, it's when I first even learned about currency swapping and this really peculiar thing about the average Japanese person, especially girls. Believe it or not, girls, because when they get married in Japan in particular, they have to leave their job. They can't stay married, or they can't stay working. They have to go and be a
Hmm.
mom.
Oh.
And so you have all these super skilled women who are also in charge of the family's finances. That's a typical female mother job. They get the paycheck and they spend the money.
Oh.
And so I would meet people and they would say, "Oh, when are you trading your currency?" And I would say, "What are you talking about? Like, I just trade it right away. I don't know what you're talking about." And they would say, no, no, we know our government rug pulls us because they're always manipulating. Japan and Korea manipulated their currencies for years against the US dollar deliberately so that they could export to America to keep it low. And everybody there knew that. And because everyone there knew that, they're
Hmm.
all slinging coins all the time based on what they thought policy would be. That's why they had such quick adoption of Bitcoin, because retail
Oh.
participation in foreign exchange and investing is so much higher in Japan and South Korea than it is in America or almost any place I've ever been to, that to me it made them the most obvious examples to create new Bitcoin language entities, CoinDesk Korea and CoinDesk Japan, for that reason. They just have a history of doing this, and we
Hmm.
would get 100% saturation immediately, which we did. These things are still operational, doing great, having scoops, doing all that stuff. And that's unique to Korea and Japan. Korea and Japan, like I said, it's two places where you go and you go to college, and the guys are doing the football thing with the Letterman jackets and the varsity leather, and girl cheerleaders. And you don't see that. I went to college in France. You don't see anything like that in Europe. That's a uniquely American thing. And when you find it in Japan and Korea, like literally big man on campus walking down with the Letterman jacket, and it's America. It's America. It's too late to change them. They're American.
Man, sounds like fast times at Tokyo High over there. I'm totally for it. I want to go it. I want to live back in the 70s and 80s. It sounds great. I'm here for it. I'm moving to Japan. And my girlfriends get all my money anyways, and they spend it for me and do nothing else. I feel like I'm kind of
There
already
you
living this life
go.
as is. So
There you go. There you
I've been
go.
living the Japanese standard. Didn't even know. All right, we got one more story to cover here, Nolan. So hang 10. Michael Saylor says he can survive a Bitcoin apocalypse, and analysts are looking at the math and they're like, buddy, are you sure? Because Bitcoin fell, as we know, under 90K this week, and that drop dragged almost every 2025 investor into the red, including Strategy, Saylor's own company and the largest corporate Bitcoin holder on earth. Instead of worrying, Saylor did what Saylor does, and he doubled down harder than a Vegas tourist with one last chip. Now, he told Fox that Strategy could withstand an 80 to 90% Bitcoin crash and keep operating. The real problem isn't the price. It's Strategy's MNAV, a financial metric comparing the firm's enterprise value to its Bitcoin holdings, and it has slipped below 1. Now, for Bitcoin treasury companies, MNAV under 1 is basically engine light on warning, except instead of a car, it's billions of dollars of internet money. At 0.93, investors are essentially saying the Bitcoin on Strategy's books is worth more than Strategy itself. Analysts warn that no company can survive long like that, not because lenders will seize the Bitcoin, Saylor made sure the debts were convertible, but because a public company can't function if markets value it at a permanent discount. Now, if Bitcoin keeps slipping deeper, Strategy may need to sell Bitcoin to cover those obligations. The exact scenario Saylor insists will never happen. Maybe he's right, maybe he's manifesting, or maybe the market will decide for him long before Bitcoin makes a new all-time high again. Bringing Nolan back. Nolan, Saylor says Strategy could survive an 80-90% Bitcoin crash despite its MNAV falling below 1, meaning markets value the company less than the Bitcoin it holds. How do you interpret that level of conviction from a corporate leader? And is it brilliance, delusion, maybe a bit of both? Where do you stand on this one?
No, I think his math is probably correct on surviving. I think that's probably right. It's hard to really pierce through all the stuff with MicroStrategy because there's just so many announcements all the time. There was the 42 billion they raised last year. But what I remember from what they raised in order to buy, like I don't know how much of that 42 billion is already spent or what's going on. Because they announce every Sunday and then what happens next and where's the money coming from. They say it every time, but it's just every time, so you can't keep track. What I do know is
Right.
that the amount they raised last year around this time was enough to buy every Bitcoin mined between now or between for the whole cycle, between the halving and the next cycle at 70,000 US trash tokens. So you did the math, they raised 42 billion. It accounted for every Bitcoin sold until the next halving, and it couldn't go lower than 70 something thousand. That was a signal to the treasury management of the miners who now the miners are in a weird position because the miners used to be forced to sell with every Bitcoin collapse in the early cycles. So 2017, that's what really put the turbocharge on the Bitcoin collapse in 2018 was the miners weren't really sophisticated. They were just literally miners who had Bitcoin and then they sold it and they paid electrical bills. They didn't have financial engineers working for them. So immediately in 2018, you saw them all ramp that up. You saw them all go out and buy the best risk managers in the world. You saw Bitmain actually create with Cyberport its own OTC desk, which is still one of the biggest OTC desks in Bitcoin, to sell the Bitcoin directly that they mine themselves. And were able to use all the things that Saylor is using, all kinds of financial hedging and all kinds of risk management and all kinds of different instruments and tools and this and that. They got the best of the best. So you went from them having to have the best of the best risk managers to survive to actually having someone like Saylor come out and actually say, you don't have to worry about that. I'll buy no matter what at this price. So I think there is a absolute bottom the market can go to that's still pretty high. You're not going to have forced sales by the treasury guys because, like I said, they know how to read the room now and they know who's buying and they know who they're selling to, and their calculations are now in a different order with all of this announced capital that Saylor has already. But what we have noticed, and the reason why there is efforts like 21, and the reason why there are other treasury companies, is because it seems to me that the minute Saylor stopped having the cash flow from Strategy to buy the Bitcoin, that he was using these financial engineering things, what ended up happening was he can actually only buy Bitcoin when the Bitcoin is high. Weirdly, he only gets the leverage that he needs when Bitcoin is up. It doesn't look like, and I said this for most of the year, it doesn't look like Saylor can buy cheap Bitcoin anymore. It looks like every time Bitcoin comes down, all of the stuff you're talking about becomes reality, right? So he is not in a position to
Yeah.
buy cheap Bitcoin. He has to buy expensive Bitcoin. Just the nature of the way he's built it, where he is in his own accumulation cycle, but he's so far ahead. Now, the reason why other folks like 21 are getting active is because they see an opportunity to create cash flow and buy cheap Bitcoin when Saylor can't go out and get it. So you saw Jack Mallers yesterday. He did a tour on all the Kitco and all the financial networks, and he said 21x is not a typical buy and hold Bitcoin treasury company. We're going to generate a cash flow. We're going to generate a business on the Bitcoin so that we can buy Bitcoin at any price. And so that's why we all saw that Cantor Fitzgerald had a big Bitcoin event last week in Miami. That's 21x. That's more or less them in their announcement when Jack Mallers came in saying they were going to get into Bitcoin events. They were going to get into Bitcoin media. They were going to get into all these kinds of things. So you have an opportunity with Saylor already at the top end. You've got all these others that are trying to buy cheap Bitcoin and that are trying to generate cash flow to buy cheap Bitcoin. That's why some like Naka, who people don't see the cash flow, they say, how can they just do this? They're just going into debt. So that would be the other extreme compared to what 21X has done. So I think what we see with Saylor is Saylor structurally limited himself a little bit. I think he's fine as far as surviving. I don't think he gets to accumulate at the same rates when Bitcoin goes down. But others will. And this is a scenario where others can catch him. So I don't know exactly how this goes on, but 21X and what they're up to me, looks like a pretty good chance that you're going to get the Berkshire Hathaway cash flow positive businesses instead of buying dividend yielding stocks, which was the Berkshire Hathaway model forever. You've got this holding company that can bring in other companies to generate cash flow, use the cash flow to buy Bitcoin. Not exactly what Saylor has done. So Saylor looks like he's baked
Mhm.
it into his own model. There's a limit to what he can buy. He's got to buy expensive Bitcoin. Can't really get the cheap stuff because he'll be outcompeted by others. Survival, yes.
Mhm.
Accumulating much more, no, unless it goes back up. And it goes back up, he gets all the money he needs to go buy more. But again, he can't buy cheap Bitcoin.
Yeah.
These aren't buying patterns for him. It's psychological in the end. The enthusiasm, you look at the numbers and you say, okay, you're not going to be able to accumulate, others will come in. So it's a good chance for others to
Mhm.
get some of the corn.
Yeah, I'm glad he's leaving some for the rest of us. It's very kind of him.
Yeah.
And zooming out, last question here, Nolan. If we were to zoom out, and I'm not asking you to predict the future here, but do you feel like this could be a case where Saylor's long-term vision might be correct, but maybe the public company structure right now is incompatible with Bitcoin's volatility? Or is maybe the market simply underestimating how this story is going to end?
Yeah, I think the market is underestimating the nature of bimetallism, what the stablecoin companies are really up to, what Tether is really up to, what Besant is up to with the stablecoin companies, what all of this Korea, Japan, Argentina, Canada, everyone else who's in the American orbit having their own fiat currency, what it means for those fiat currencies going forward. I think they're much more vulnerable to this change. And the US dollar looks like it's going to be able to leverage US industrial policy, just like I said with the Mar-a-Lago Accords. But ultimately, we are headed into a world of two types of money: one money for spending that's purely political, one money for saving that is purely for saving and for wealth management and wealth building. And so it's all about, just like I said, it's about the dollar type, the types of cash generating businesses that you can create that will also supply consumer markets with goods and things and industrial or government policy. So we're talking about food stamps, we're talking about all the consumable items that are out there, consumer money, and at the same end, we're talking about savings technology. So I think this frame, this Mar-a-Lago Accord frame that I was mentioning earlier, will fit nicely
Mhm.
into what Michael Saylor is building. Michael Saylor is building something like the compatible corporate model for this Mar-a-Lago Accord thing that will be explicitly bimetallic. It will be explicitly money for policy, money for wealth and savings. The energy companies, the banks will all want the money for savings, the gold, the digital gold, the consumer-facing companies will want the cash. Cash flow will help you buy Bitcoin. Cash flow will help you do all of these, connect with the consumer market, connect with the government policies that they still want to see enacted and living healthy. So I think it all looks exactly like what we're going to hear from the Mar-a-Lago Accord. So I think we wouldn't want to judge the exact configuration of strategy until we hear more about the Mar-a-Lago Accords, which I think we will in the next few months. And every time I see Michael Saylor out there in DC, I think he's getting the alpha about what the Mar-a-Lago Accords are all about. And I expect his configuration of strategy to fit perfectly in that.
Mhm. Well, I got to say, you fit perfectly into every segment we have you every time here, Nolan. It is always an absolute treasure to have you on the show. So I want to thank you so much for taking the time to share your insights and expertise with us. As always, I hope you have a good rest of the week, and I believe we will see you next week for more talk, right?
You'll see me on Tuesday. I suppose we're all going to be taking off for our beautiful Thanksgiving holiday. So probably Tuesday, Wednesday,
Right.
I'll be here. I expect to
Okay.
travel Wednesday night, so I might not do my own show on Thanksgiving. I haven't made up my mind yet. The harder one to do, though, is the Friday
Mm-hmm.
one because there's no news generated the Thursday,
Mm.
so it's almost impossible to do the Friday
Right.
show. The Thursday is possible.
Right.
The Friday a little
Mm-hmm.
less. So we'll see. I'll be updating my audience when that day comes. But I love coming, Hank. I love coming here, chatting with this stuff with you. It's a different format for me, and I like the back and
Yeah.
forth. And so there you go.
Yeah, well, we appreciate you having here, and yeah, it'd be tough to talk on Friday. I can only talk about Black Friday deals for so long. So maybe you give yourself a break on that one. But in the meantime, Nolan, enjoy the rest of your week, buddy. Always a treasure to have you, and we'll see you next week.
Peace. Take it easy.
See you, bud. Cheers. Yeah, you too. All right, we're taking a quick break here at the Blockchain Report, but when we're back, we got more of today's top stories, and we're going to dive deep into the charts and see if we can tell you where we think Bitcoin is heading next as we head closer to the final month of the year. Are we going to hit any of those price targets? God willing, I sure hope so, but we'll find out about that and more when we return right after this break.
Others, Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Are you interested in effortlessly growing your Bitcoin portfolio? I sure am, and the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card, buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee, and right now you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. All right, guys, well, it looks like yesterday's market reversal after the Nvidia earnings report was short-lived. Right now, Bitcoin is definitely experiencing a bit of pain. We're down about 3% in the last 24 hours. We've sunk below that 90K mark, which we were at just at the top of the show. Now we're down to just around $87,000. So right now, blood in the streets, but let's see if we can take a deeper dive into where things are actually going in our Bitcoin Alpha segment, okay? This is where we stare directly into Bitcoin's on-chain soul so that you don't have to, okay? So it's November 20th, 2025. Bitcoin's currently at around 87K, and the question everyone keeps asking is, Hank, is this a local bottom or the beginning of a very, very unfun Christmas? Well, we've got 3 on-chain charts today, the AASI, MVRV pricing bands, and the NUPLZ, and each one is basically waving its arms, trying to tell us a slightly different version of the same story. So let's break it down and bring up our first chart. shows whether the actual Bitcoin network usage, so people moving coins, interacting with the chain, is rising or falling compared to the price. Now, when address activity rises faster than the price, that's bullish. When price rises but address activity drops, well, that's the crypto equivalent of a dating profile that looks great but has 0 photos from the last couple of years. Always don't like that. Now, right now, address activity is dipping into the same lower zone we've hit during every recent local bottom. All right, so we can take a look here at these green highlighted zones at the bottom of the chart. Those are the local bottom signals, okay? So we see them here and here. There's a whole bunch of them. All right, let's just circle all these here. Okay, we got them. All right, so this is a short-term indicator. We're talking hours, days, and weeks, but not necessarily months. But historically, every time this dips into the lower band, Bitcoin tends to give us gives us at least a little relief bounce, okay? So this chart is basically saying, yes, this feels a little gross, but it usually gets better from here, unless, of course, the other metrics disagree. And spoiler alert, the other metrics do have some notes. So let's go to our next chart here, gang. This is the MVRV pricing bands chart we're bringing up right now. This one is more midterm and way more serious, okay? So the MVRV compares Bitcoin's market price to the network's actual cost basis, or what everyone paid for their coins. Now, when the price stays above that yellow band we can see kind of going across here, right? When it stays above that, things are healthy, but when the price dips below that band, all right, that historically signals weakness and potential trend reversals. And right now, we are below that band, okay? So this is notable because the last 2 dips to this line, which were earlier in 2024 and mid-2025, bounced pretty quickly, right? And this one, well, it hasn't, all right? And that's why analysts right now are sweating. If the weakness continues, the next major support band is the negative 0.5 SD line, which equals roughly 79K, okay? So a drop there would officially qualify as a technical bear market under most definitions. Below that, we have this purple line here. Let's see if I can change to a purple color if this works today. All right, so we got this purple band here, right? That's the realized price. That's currently sitting around 56.2K. Historically, full bear markets always dip below this purple line we're seeing, okay? So we're not there yet, and we'd really prefer not to go there if we can avoid it. So the conclusion for this particular metric is short-term bearish unless we got some buyers stepping in very, very soon. That brings us to chart number 3. This is the net unrealized profit loss, or NUPLZ, all right? This chart measures how much the market is emotionally underwater or euphoric. So blue equals max pain, orange, excitement, red equals full euphoria, usually a cycle top, pink, short-term holder panic, and yellow is kind of a combined signal, all right? So right now, the interesting part is the short-term holder capitulation, and those are the pink bars we're seeing on here, which have dipped to the exact same depth as the last 2 bottoms of this cycle, right? We can see them all right here, same spot. I'm gonna change my, my color though. The yellow just seems to pop a little better. There we go, so we got them right here, okay? So these mark identical capitulation levels. Now, this tells us something pretty important. Short-term holders are wiping out again at the exact same depth, basically. And historically, that has been where relief rallies begin. The other important thing here is what didn't happen. We never entered euphoria levels before, topping out, all right? So you can see some of these euphoria levels in 2017 and 2021, right? So we got some euphoria up here. 2021, we got some euphoria here. All right, so those are more true cycle tops. And then this raises a real question for us. Did we already top, or is this cycle simply deflated but not necessarily over? This chart leaves that door wide open for us, okay? So there's still hope in the game here. So what does this all mean, Hank? Tell me this in plain English. Combine all these charts. What are we looking at here, right? So again, the AASI short-term bottom signals are flashing. So there's probably a relief rally likely according to that. The MVRV pricing bands, short-term to mid-term bearish unless price reclaims the yellow band we talked about earlier, and soon. And the NUPLZ, the short-term holder capitulation, matches prior local bottoms, and the market never reached euphoria, suggesting this might not be the final top. You put all these three together, and the market is technically bearish, but emotionally bottomish and structurally just unclear right now. Or in other words, we're in the part of the cycle where both bulls and bears sound smart, depending on which sentence they stop reading at. Longer cycles are possible, but so is deeper pain if buyers don't step in quickly. So that's our market rundown and report for today. We're going to take a quick break, but we've got a lot more stories in store for you on today's show, so stay tuned. Blockchain Report will be coming back your way right after this. All right, welcome back to the Blockchain Report. It's time for more of this morning's Bull Run, where we go over the top stories of the day. So let's get back on into it, shall we? Well, Nvidia, they printed so much money in Q3 that the entire tech sector looked up and said, oh, thank God, AI isn't dead after all. Nvidia reported record-breaking revenues of $57 billion. That's up 62% year over year, which means if you thought this AI wave was slowing down, Nvidia would like to politely disagree with you with a dump truck full of cash. Profits came at $31.9 billion. Guidance for Q4, a casual $65 billion in projected revenue. Apparently, the AI bubble everyone was panicking about has decided to extend its vacation. Tech stocks rallied after hours. Apple, Microsoft, Alphabet, Amazon, and Meta all climbed because when Nvidia says we're fine, Silicon Valley assumes that everyone's fine. And crypto companies, they got pulled up too. Coinbase, Strategy, and Circle all saw little lifts after hours, even though they spent the day doing that classic crypto thing where your portfolio looks like it fell down a flight of stairs. Now, bullish, the exchange, not the market mood, also got a boost after reporting its strongest quarter since going public. But the most interesting rebound at the time was Bitcoin. You see, Bitcoin dipped below 89K yesterday for the first time since back in April. Then Nvidia showed up with the earnings equivalent of a defibrillator, and Bitcoin bounced back to around 92K. So what does this actually mean? Well, Nvidia crushes earnings, and suddenly the entire risk asset universe decides life isn't so bad after all. And for Bitcoin, which has taken a 10% beating in the past week, Nvidia's numbers are a reminder that AI mania still fuels demand for chips. Chips fuel tech, and tech fuels risk appetite. And risk appetite fuels Bitcoin. For now, AI is holding up its end of the deal. Let's see how long the good mood lasts for. Apparently not that long. We're down 3% in the last 24 hours, so it was short-lived. All right, Kraken, well, you know them. They've confidentially filed to go public in the U.S., and that's according to a source speaking with CNBC. Now, this comes after Kraken raised $800 million at a $20 billion valuation. Kraken is one of the world's biggest exchanges, offering trading in Bitcoin and even tokenized equities in the European Union. Now, the company says the $800 million they raised will fuel global expansion and help build out payment services, all while it preps its next phase as a publicly traded giant. Now, if this IPO goes smoothly, it could cement Kraken as the next major U.S. crypto company to enter the public stage. But the bigger story is the momentum. Crypto firms are raising, listing, expanding, and positioning themselves for a mainstream finance cycle that seems to be warming up again. And New Hampshire, you know that state. I don't know anyone's actually been there, but it's a state still. And they've officially approved the first municipal debt instrument in U.S. history backed by Bitcoin. Not a Bitcoin fund, not a Bitcoin pilot program, a full-blown Bitcoin-secured municipal bond. It's a $100 million financing structure approved by Business Finance Authority. Companies can now borrow against over-collateralized Bitcoin held by a private custodian, roughly 160% collateral to loan value. Now, if BTC's price drops and collateral moves under 130%, safeguards kick in to protect investors. Or in other words, this isn't let's YOLO a bond and pray, it's actually engineered like a real institutional product. Imagine that. Now, the structure doesn't rely on taxpayer money, it doesn't force the state to guarantee anything, and doesn't trigger taxes for borrowers because they're not selling the Bitcoin. Instead, the transaction fees support New Hampshire's Bitcoin Economic Development Fund. Governor Kelly Ayotte celebrated the move, saying that she's proud New Hampshire is the first in the nation on this. And honestly, They are. I mean, this is the first time digital asset-backed lending has entered the municipal finance world. Industry analysts believe this could be the crack in the dam for the $140 trillion global debt market, $58 trillion of which is in the United States. Now, Bitcoin has sat idle on the balance sheet for years, but now states are experimenting unlocking its stored value without forcing a sale. Legislator Keith Ammann, who authored the state's strategic Bitcoin reserve bill, calls this a test run for using Bitcoin as a high-quality collateral in government financing. No hype, no meme coin nonsense. This is actual infrastructure we're talking about here, gang. And if this works, other states will likely follow suit. If it fails, well, it's New Hampshire. They'll still say they were right anyway. Uh-oh, Jim Cramer's back in the news, and when he says the word cabal, you know markets have officially entered their performance art phase. Bitcoin has been wobbling around 90K for weeks. We've seen it drop to about 87 in just the last couple of minutes here. And some investors think the downturn is the resetting of the market. Others think it's the start of something uglier. And the Federal Reserve continues to argue with itself in public about whether December means a rate cut or a surprise. Inflation is still an annoying moment. Now, sentiment remains fragile here. The Fear and Greed Index crawled from 11 to 15, which means we've gone from full existential meltdown to moderately nervous toddler. But then, of course, there's Jim Cramer. Yesterday, he posted on X saying it almost feels like a cabal is trying to keep Bitcoin above 90K. A cabal, a secret group, invisible hands, propping up Bitcoin like it's a weekend at Bernie's, if you will. Now, to be fair, Cramer did add that he still supports Bitcoin itself, but doesn't like derivatives, miners, or anything that allows people to game it, which is kind of like saying you love pizza but hate cheese, sauce, and bread. But it's Cramer, man, is what it is. Moving on. Harvard, well, they're reopening its own Epstein investigation. The school is reviewing a fresh batch of newly released emails showing that Lawrence Summers, former Harvard president and former Treasury Secretary, had a far closer relationship with Jeffrey Epstein than anyone previously knew. And by closer, I mean frequent emails, favors, advice, and even Summers' wife thanking Epstein for helping fund her Harvard Humanities Project. Now, this is all on top of the 2020 Harvard investigation revealing Epstein donated over $9 million to the university and visited campus more than 40 times after becoming a registered sex offender. Now, the newly released emails, over 23,000 documents, show that Summers kept messaging Epstein through 2017, 2018, and 2019. Yeah, that's nearly a decade after Epstein's conviction, and no, that timeline isn't exactly doing Summers any favors. In the email, Summers also treats Epstein like some sort of pseudo-relationship therapist, asking for advice about women he was pursuing. Which raises the obvious question, why is the guy with the world's worst dating resume your go-to for romantic strategy? Summers has now announced he is deeply ashamed, stepping back from public commitments, leaving various boards, and ending professional affiliations, including stepping down from OpenAI. But he'll continue teaching at Harvard because apparently tenure is stronger than steel. Harvard says the new review will determine what actions may be warranted. Or in other words, they're trying to figure out how to clean this up without having to dig up even more emails. And Texas tried to put the 10 Commandments in every classroom, and a federal judge basically said, "Thou shalt not." The several Texas school districts have been ordered to remove their 10 Commandments displays by December 1st. Now, this stems from a new state law requiring every public classroom to hang a poster of the 10 Commandments in a visible location. Yes, a mandatory religious poster in a public school in 2025. Predictably, lawsuits followed. A group of 15 families filed the challenge, arguing the law violated both religious freedom and the separation of church and state. U.S. District Judge Orlando Garcia agreed, issuing a preliminary injunction blocking the law and ordering districts to take the posters down. He wrote that without court intervention, families would face unwelcome religious displays. Now, some districts say they'll comply, others offered no comment. A federal appeals court will hear arguments early next year, and Louisiana has a similar law under review, meaning this fight is far from over. Now, this case taps into a broader national tension. Should public schools promote specific religious texts, or should classrooms stay neutral? Supporters argue the 10 Commandments reflect moral values. Opponents say mandating scripture in classrooms crosses a constitutional line. The stakes here are big, and the ripple effects could hit multiple states. But for now, Texas schools have their homework assignment. Please remove the giant posters telling kids not to steal before someone steals the posters themselves. All right, gang, it's time to check out what is going on in the Twitterverse and our Scroll Patrol section. Let's see what is trending on the interwebs right now, if there's been any news since we last checked. So let's bring them up here, guys, and take a look. I'm curious to see what we got for today. Okay, so first up here, oh man, the myth, our Lord and Saylor is back with another AI image. He really is the king of these, and we really do need to start collecting these. I think maybe we'll just make a whole screen of them. And it looks like he's in some kind of night gear of some sort. I don't know. And he just says, never back down. So it looks like Saylor is showing conviction despite the pullback we have certainly seen in the Bitcoin market in the last 3 months. I just checked my own account, and it is looking not good. But I'm going to pretend I have that armor on here too, and I'm just as brave as him. He's got a lot more stake in this game than I do. Let's scroll down to the next one here, guys. Let's see what else we got in store. Oh, it's another one. Just Bitcoin. Okay, I'm getting kind of Tyler Durden-esque vibes here. So like, I don't even really understand this one. But you know, that's okay. I don't need to understand it. It's AI, and I like that he has a sense of humor about himself, or he's got a really good intern who deserves to be paid more, because these are just outrageous. But I'm here for it. All right, what else we got here? We got a meme with Sydney Sweeney. This is from Simply Bitcoin. They do great stuff as well. If you haven't checked them out, make sure to do so. Nico's great. So you might remember this is from this interview recently that came out, and I think it was with GQ, and the reporter asked Sydney Sweeney if she felt bad at all about that jeans ad, and this seems to be a parody of that, where she now says Bitcoin is worthless, and Sydney Sweeney, with her very straight face, just says, give me one then. Yeah, I'm here for a good meme. Let's keep moving on. I like it. Good jobs, guys, at Simply Bitcoin. Like what you're doing over there. What else we got here? Breaking. Within 24 hours, Nicki Minaj gave a speech at the UN on behalf of Trump administration, and Cristiano Ronaldo met Trump. Woke has never been more dead. Celebrities don't care anymore. Nicki Minaj giving a speech at the UN. Definitely was never on any bingo card in any of the simulations that I would have ever guessed, but respect. Yeah, Ronaldo and Trump seems appropriate. You know, best football player in the world, president of the United States. I guess they belong together. It was kind of weird seeing him at that dinner, though. It's like you had Elon, you know, all of the big players in politics, and then Ronaldo is taking a selfie with all of them. I can't pretend to understand any of this. I'm just here with my popcorn, you know. Let's. What else we got in Scroll Patrol, guys? We got any more? Let's see here. Vitalik Buterin, Ethereum will surprise a lot of people. You know, I feel like we've been hearing this for a while now, Vitalik, and I got to take issue with this, because during the last cycle, we saw Ethereum go into like the mid-high 4,000s. We saw it eclipse its previous all-time highs this cycle, but it's done a whole lot of nothing. And I think I know why. See, earlier in the year, if you watched us in the early days here at the Blockchain Report, you might remember that Vitalik Buterin had this obsession with that pygmy hippo, Mu Dang, and I feel pretty convinced that he's been spending too much of his time slopping around with this baby hippo and not developing Ethereum's, you know, roadmap further. And we've seen it kind of stall out. I think last I checked, it was around 3,000, but I bet it's lower now, seeing that Bitcoin has dropped this morning. So, I mean, yes, do you look cool in those sunglasses, Vitalik? Yes, but let's keep our eye on the prize, and then maybe you will surprise us. Right now, I'm not feeling super confident, unfortunately. And leave that little baby hippo alone. Come on, guys. Let him be with his family. We got any more Scroll Patrol here, guys? Let's see. Me making my first payment of a 50-year mortgage. Yeah, it'll take forever. This seems like a gimmick to me. If you officially, I mean, like, I probably won't outlive any mortgage I take out if it's 50 years at this point. I just don't have that much time left, probably. So money will just be going into a black hole forever. Yeah, I'm not about it. What else we got? Breaking, China has built over 2,500 kilometers worth of railroad length in 2025. You know, it's frustrating as an American to see this, because this is exactly what we need to be doing here in the United States. People have talked about it before, but we are in need desperately of a new deal. Let's start putting people back to work rebuilding the infrastructure of this country, right? High-speed rail. The TSA doesn't mess with the rail. You're not going to be delayed for Christmas on the rail. And those trains in Japan and China, man, if they're late even by a few seconds, like the conductor has to go and apologize to everybody on the train. Like they got the right train of thought here, pun very much intended. And I think this might be a lesson we could learn. Let's start rebuilding this country, guys. FDR had it right. It can work again, but what do I know? We got any more? Let's see.
China has smart transfer beds that allow patients to be moved.
This seems like a great idea. How did we not figure this one out, right? I've seen enough of those like ER type shows where they're just flinging somebody with a gunshot wound in their gut on the bed. That can't be good. And this looks kind of nice. It's like a little magic carpet ride over to the next bed. This is the kind. Why don't we have these in America? Our health system's the worst, man. We got to get on board these train guys. I hope people are watching out here. This is what we need. This is innovation. Wish you could grab cash without selling your Bitcoin? Yeah, same. But hey, that's why Ledden exists. They're the global leader in Bitcoin-backed loans. We're talking over $9 billion issued since 2018 with a perfect record protecting client assets. Now you might be asking, Hank, what makes a Ledden loan different? Well, with custody loans, your collateral, it stays put. They don't go degen and lend it out for yield. There are no credit checks. It funds in under 6 hours. No monthly payments. You can repay anytime with 0 penalties. And for transparency that grown-ups actually want, proof of reserves reports every 6 months verified by a top accounting firm. The bottom line here, gang, is Ledden lets Bitcoin holders unlock liquidity without selling. And you can check it out over at ledden.com or ledden.io/RoxomTV. That's LEDN.io/RoxomTV. All right, it's time for some socially awkward, let's get weird and get into it, because Jack Dorsey wants you to buy coffee with Bitcoin, and the IRS is the only thing standing between you and that latte. You see, under current U.S. law, every Bitcoin transaction, even buying a $4 Americano, is a taxable event if the BTC gained value since you acquired it. Now, Bitcoin advocacy groups have complained for years that this makes everyday Bitcoin payments just ridiculous. And Jack Dorsey, well, he agrees. His company Block Inc. rolled out new Square tools in October, letting merchants accept Bitcoin with 0 fees through 2026. Now, Block is taking the next step, a full-blown Washington, D.C. campaign pushing for a federal de minimis exemption. Or in other words, small purchases under a set dollar amount, usually $50 to $200, wouldn't trigger capital gains reporting. Now, to rally support, Block launched a roaming capital gains coffee truck across DC. We're talking free treats, free BTC via Cash App, Bitcoin demos, and a side of tax policy education, which is probably the only way to make tax policy edible. Now, Compass Coffee locations across the city are also participating, demonstrating Bitcoin payments throughout the week. Now, this comes at a time when bipartisan momentum for tax updates is finally forming. Congress has debated versions of a de minimis exemption for multiple cycles, but never passed one. State tax burdens vary wildly. California, New York, and Hawaii impose some of the highest crypto tax loads. Meanwhile, Florida, Texas, Wyoming, Nevada, and South Dakota skip income tax entirely. Now, Dorsey argues that if Bitcoin is ever going to function as actual money, not just a long-term savings asset, the tax code has to stop punishing people for buying a muffin. The campaign aims to make that point loud enough that lawmakers can't ignore it. Now, whether Congress moves is another question, but if anyone can get politicians to think about Bitcoin while drinking free coffee, let's be real, it's Jack Dorsey. And Sam Altman's eye-scanning orb company has finally said the quiet part out loud. If you care about anything outside of work, they'd just prefer you leave. You see, Tools for Humanity, the startup behind Orb, held an all-hands meeting where CEO Alex Blania told employees their only concern should be the mission, building a global identity system to verify who's human in the age of AI. And if anyone cares about something else, well, he said they should not be here. That's one way to motivate a team. It's also the plot of every workplace cult documentary ever made. Now, Slides in the Office backed it up with team values like We work weekends and we're always on call. We don't tolerate slowness. And the very comforting, we don't have time to worry about each other's feelings. Now, the company claims this intensity is required because the mission is monumental. They want billions of people verified, millions of orbs deployed, and they've scanned only about 17.5 million so far. Now, Blania told employees the company doesn't care about DEI, ideology, politics, or anything else that might distract from grinding themselves into orbital dust. Ironically, he mentioned that attending President Trump's inauguration during a presentation that said politics don't matter. Now, employees were also encouraged to use more AI tools, even though the whole point of the orb is about protecting human identity in an AI world. So, yeah, the company saving humanity is also making its staff work through weekends, ignore their personal lives, stop worrying about feelings, and embrace an afterburner on mindset. Sounds great. I'm not going to work there. All right, another news. Nothing says healthy society quite like the richest man on earth arguing with a pop star over who's more annoying. You see, Elon Musk fired back at Billie Eilish after she called him pathetic and a coward for not using his wealth to solve global problems as he edges toward trillionaire territory. Musk responded on X by saying, "She's not the sharpest tool in the shed," proving that even the world's richest man still quotes Smash Mouth when he's mad online. Now, this whole feud kicked off right after Musk won a massive shareholder vote, unlocking a potential $1 trillion stock payout over the next decade if Tesla hits certain performance milestones. So, yes, he can technically become a trillionaire, and yes, Billie Eilish is absolutely going to say something about that. Eilish also took shots at billionaires broadly, including Mark Zuckerberg, during the Wall Street Journal Innovator Awards, asking, if you're a billionaire, why are you a billionaire? Which is honestly the most polite way to say, what exactly is your plan here? Now, Musk's reply suggests that he's not exactly losing sleep over this, but it highlights a bigger cultural divide here. Younger generations questioning extreme wealth, while the ultra-rich respond with memes and slightly wounded pride. And that's where this story ends. A pop star, a mega billionaire, and a global audience watching two people with more money and Grammys than most countries argue about whether rich people should be less rich. And a solid gold toilet named America sold for over $12 million, proving once and for all that the art market is essentially a luxury laundromat with better lighting. You see, the 18-carat throne was created by Mauricio Catalan, the same man, if you remember, duct-taped a banana to a wall and sold it for $6.2 million. So he's basically the Picasso of trolling rich people at this point. Now, this toilet weighs 223 pounds and was cast from more than 100 kilograms of solid gold. It's fully functional, by the way, because nothing screams late-stage empire quite like peeing into a retirement account. Now, over 100,000 people lined up to try it when it debuted at the Guggenheim. So, yeah, Americans will refuse to wait 12 minutes for a latte, but they'll stand in line for hours just to test drive a luxury restroom feature. Okay. Now, the toilet being auctioned is the only remaining version since another one was stolen from the Blenheim Palace in 2019, one of the few art heists where the thieves definitely needed a lower back brace. Sotheby's listed the starting bid at roughly the melt value of the gold, which is one way to say, please don't actually melt the sculpture, even though we know you're thinking about it. Now, their contemporary art chief described the toilet as a mirror of decadence, which is a polite way of saying you are the problem and also the punchline. Now, Catalan has always specialized in mocking culture, wealth, and art industry itself, and now he's done it again with a toilet that costs more than most luxury homes. The piece follows his 2024 hit Comedian, the banana-on-the-wall masterpiece that was later purchased and eaten by Tron founder Justin Sun, who called consuming it part of the artistic experience. Okay, which I guess is one interpretation. Another interpretation is that some people might have too much money and absolutely no fear of potassium. Either way, America now belongs to its new owner, and somewhere a plumber is praying this never, ever needs repairs. We're taking a break, but when we're back, we're going to get ready to wrap up today's show with a little bullish, bearish, or BS to see how things are looking as we head closer to the weekend. So stay tuned. More Blockchain Report coming your way right after this.
Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, it's time to wrap up this Thursday with a little bullish, bearish, or BS. This is where we recap today's top stories and see how they're making things looking going forward. So let's talk about them. First up, President Trump has signed the Epstein Files Transparency Act, forcing the DOJ, FBI, and the U.S. Attorney offices to release all unclassified Epstein-related documents within 30 days. Now, both Democrats and Republicans supported the move, each convinced the file dump will politically nuke the other side. Survivor groups are celebrating while the internet is preparing for the biggest conspiracy theory fuel dump since WikiLeaks. I'm going to call BS on this one, all right? This is BS specifically for Bitcoin in the market because it has zero fundamental connection to the assets, right? It's pure political spectacle that distracts markets more than it moves them. Any short-term impact on Bitcoin or other assets will come from volatility as headlines drown out economic news, not from anything in the files themselves. Long term, this has no bearing on Bitcoin or any other price action unless the documents mysteriously include Satoshi's name or something. And let's be honest, I don't think they do. So I'm calling BS. This is huge political theater. Zero impact on the markets. Moving on. We got, after 44 days shutdown, the September jobs report finally dropped and beat expectations with 119,000 new jobs added. Now, unemployment ticked up to 4.4% as wage growth cooled, the exact kind of mixed signal that makes the Fed clutch its pearls. Now, markets reacted because this is the last major data point before the December rate decision. Ooh, I'm going to call bearish on this one, all right? I mean, Bitcoin don't particularly like uncertainty, and this report basically says, surprise, the economy has no idea what it's doing right now. A higher unemployment rate combined with slowing wage growth puts pressure on the Fed to keep rates steady rather than a cut. And high rates historically suppress Bitcoin in the market's upside. So if December brings no rate cut, it keeps liquidity tight and keeps the market's rally on a leash. So again, it's bearish because there's some weird old jobs data that just came out. It keeps the Fed cautious, which keeps Bitcoin and risk on assets capped, at least in the short term. So that's how we're feeling there. Excuse me. Last up, Michael Saylor says strategy could survive an 80 to 90% Bitcoin crash, even if its MNAV drops below 1, meaning the company is now worth less than the Bitcoin it actually holds. Now, analysts disagree, warning that no public company can operate with a persistent valuation discount, especially one sitting on almost 650,000 Bitcoin. Now, if BTC keeps sliding, strategy might face painful decisions even Saylor doesn't want to imagine. Ooh, I'm going to go bullish on this one, okay? Because this is bullish because even in a brutal drawdown, the largest corporate Bitcoin holder refuses to sell. And that conviction matters more than temporary valuations themselves. If Saylor holds through the volatility, it signals to institutions everywhere that Bitcoin is a long-duration asset, not a quarterly performance toy. Long term, the message here is actually quite simple. The biggest corporate hodler isn't blinking, and that strengthens Bitcoin's narrative of resilience. So I'm feeling bullish about it. Saylor saying I'm not selling reinforces long-term conviction, especially as the primary evangelist of the Bitcoin space. So today's final score, we've got one BS, one bearish, and one bullish. So today's final result is just a whole load of bull, man. I mean, today's news cycle is an absolute circus, and the Bitcoin market and risk on assets generally hate circuses. One story has no economic relevance, another muddles the Fed outlook, and the third is a philosophical flex from Saylor rather than a practical market mover. It all adds up to a day that's less about price direction and more about noise. Loud, messy, unhelpful noise. So kind of a BS day. But that's okay, because tomorrow is Friday, and hopefully we're going to be ending this week on a good note. We got 1 month left, just a little bit more than 1 month left. So hopefully we're going to see some more bullish news toward the end of the year as people rebalance their books and people get ready for that holiday season. You know, a lot of spending happens there. You're going to inject a lot of liquidity in the market. So I remain optimistic despite the recent drawdown we've seen in Bitcoin's price. We're still on the right track here. And that is a wrap for today's episode of the Blockchain Report, boys and girls. If you haven't already, please do us the thing. Make sure to like, follow, and subscribe to RoxomTV, the Blockchain Report. And if you're feeling spicy, you can check me out at Hank at RoxomTV on all platforms you care about. And I will see you all tomorrow, assuming no one dumps another 10,000 pages of government files on the internet before then. So until then, thanks for watching, and stay safe, stay informed. And huddle on, boys and girls. I'll see you tomorrow.